actually up to. You know, most traders, they pull up a standard price chart and think, okay, this is it. This is all the information I need. But what if I told you those familiar patterns, those candles you've been staring at, are only showing you half the picture? And maybe, just maybe, they're leaving out the most important part.
Get this, it takes your brain up to half a second just to see a price change on the screen and decide what to do. In the time it takes you to blink, trading algorithms have already placed and executed thousands of orders. So by the time you see a big move happening, the smart money is already in position. This isn't just a small speed advantage, it means you're fundamentally playing a different and much slower game.
So here's what we're going to cover in this explainer. First, we'll talk about why just looking at candles can be misleading. Then, we'll uncover the invisible market where the real game is played. After that, we'll look at the tools you need to see what's happening there. We'll walk through a real-world example, and finally, we'll wrap it all up with a whole new way of looking at the market, shifting from just reacting to actually reading it.
All right, let's jump right into part one and break down why the way most people trade is, well, kind of set up for failure from the start.
The source material kicks off with a pretty brutal statistic. A staggering 96% of traders don't make money. And it's not because they aren't intelligent people. It's because they're focused on the wrong thing. They're chasing the effects, the candles, instead of understanding the cause.
And this right here is the core of the issue. A big green candle just tells you the outcome of a battle. It doesn't show you the battle itself. Relying only on price is like trying to understand a football game by only looking at the scoreboard at the end. You see who won, sure, but you have no idea about the key plays, the momentum shifts, or the strategies that actually decided the game.
So if the price chart is just the scoreboard, where is the actual game being played? Well, it's time to pull back the curtain and look at this invisible market.
Now, this is the market we all know, right? The cash market. You buy some shares of a company, you sell some shares. It's direct, it's straightforward, but it's not where the real power is. And here's where things get really interesting. The scale of this other invisible market isn't just a little bigger. It's absolutely massive. It changes everything.
That's right. For every $1 being traded in the cash market that everyone watches, there are $10 being traded in the derivatives market. That's options and futures. That's where the big institutions are really operating. Their activity in this gigantic arena is what creates the waves that eventually crash on the shore of the cash market. It truly is a game within a game, and most retail traders are completely blind to it.
So how in the world do you see this invisible market? Well, you can't use standard charts. You need a specialized toolkit, the kind that pros use.
The first tool is called Market Profile. The best way to think of it is like an MRI for the market. Instead of just showing you a single price point, it shows you where the market has spent the most time and traded the most volume. It reveals the market's skeleton, the key structural levels where institutions have been buying and selling.
Now, if Market Profile is the MRI showing you the structure, then Orderflow is the live EKG, showing you the market's heartbeat, tick by tick. It doesn't just tell you the price moved up, it shows you why it moved up. You can literally see how many aggressive buy orders hit the market versus sell orders at every single price. It's the live, unfiltered battle between buyers and sellers.
So here's the most important part. There's no single magic tool. It's about how they work together. Market Profile gives you the map of the important territory. Orderflow then tells you who's winning the fight at those key locations on the map. You combine them, and suddenly you have a clear, cohesive view of what the big institutions are likely doing.
Okay, theory is one thing, but let's see how this all comes together in a real trading day. We're going to retell the day's story, not with candles, but with these much deeper insights.
Good evening, guys. Good evening, everyone. A quick sound check. I hope I'm coming across Welcome to this Monday 5 p.m. session, and we are all set for the last settlement tomorrow for 2025. So before that, let's have a quick look at where we can find the various posts which we update on the regarding the structure of the market, uh, for which we use market profile, and we have the weekly report which is updated every week, calendar week, and then we have this daily report which has a analysis of market profile based on the daily as well as the weekly series. So you can find these posts on the blog under the forum section on the website, and they contain very important information and the references which you can watch for the next session. So always make it a point you go through these posts before the market opens so that you are better prepared to manage the markets. So let's now come to today's chart, and let's have a look of what has happened today and what are the levels which we need to concentrate on for tomorrow's settlement. So I'll just switchly come to the market profile chart of Nifty futures along with the order flow. Let's have the 15-minute order flow chart so that it is easier for us to, the 30-minute order flow chart so that it is easier for us to and I'll just increase this size. Yeah. So we had discussed about this, and we had updated in the on the X how last week we had this Santa rally which started with a higher open on Monday. We got this initiative buying tail and we held this value on Tuesday, and we went on to form new highs. But what we saw on Christmas Eve on 24th of December was this typical seaside extension which gave us a failed auction at 26269, and this marked the end of the up move and the close of the Santa rally. From here, this FA not only gave us the 180R which was at 26108, we also went on to tag the 280R which was at 25946. That is where we closed today, and these references are updated on the post which I showed on the forum section. Once the 180R was tagged, we knew where the 280R was and we were ready for that as the downside objective, and that is what we hit today. So it was very clear last week we were bullish as long as we were forming higher value on daily, but this failed auction changed the bias. From there we have formed lower value on daily. You can see we got this initiative selling tail, we formed lower value. Today we made an attempt to probe above previous value, but what did we see in the order flow? Although we took out this VWAP of Friday, we were not able to take off this selling tail from Friday. And here we saw the POC also shift to the top in the A period, and you can see how we have not got any demand. On the shorter time frame, we saw an IB3 which did not give a follow-up, and we saw no demand above that IB3 signal, and immediately we got an IS3 at the VWAP, and from there was no looking back. We just got a trending move lower. So what is the objective for tomorrow? And you can see how we formed this POC in the B period right at the rollover point of 26060. So this became our reference as we made this C-side. C-side we do not trust, so we were waiting for the D also to extend, and once D extended, it was very clear that we are headed lower. So it will be surprising to see that how come the market fell when you had a 1212 green LLT at the rollover point. So that is the reason it is very important for us to be aware about what the current data is and how close we are to the settlement, because tomorrow is the expiry. We have rolls which have coming in, and we even saw these big LLTs coming in on Friday where we saw huge volumes at 26063. The same thing repeated today. This 1212 green was not a fresh initiative buyer. In fact, this was a short who was covering in December, and he went freshly short in January. How do we know that? I'll come to the order flow chart of January series, and we'll see how right at that point we've got a big LLT in red, and the COT was also showing us red. So that is the reason you need to be aware about both the volumes when you are closer to the expiry, especially a day before and on the expiry day. So tomorrow also it will be very important to have a 30-minute order flow chart open of the January series, so that you can make a note of whenever the LLT is coming in December, you can compare it with the January series. So what happened here with, once we got this extension in the D, we continued to probe lower. We remained below VWAP, and very importantly, you can see how it started to form lower references. You can see this VWAP of the D period, which made the range extension, was at 26009, and the pullback high which we made in F was halted right there. So it was very clearly telling us that the downside probe is not done. And what happened here was, again, we continued lower. We made these new lows in the K period, in the I period, and this formed an IS30 bar. But for this IS30 to get activated, like other IS signals, we needed sell side volumes below this 25939. Although we made a look down below this in the K, what did we see? We saw zeros on the sell side. So this is telling us supply today is not adding below this level. So that is the reason this IS30 is still not activated, and we will wait for this to get activated. And when will it get activated? When we get volumes below that IS30 low. And if that happens, we will go short. The stop loss would be the IS30I, and the first target would be the range of this. So this is regarding the order flow of the current expiry. So if I quickly take you to the 30-minute order flow of Nifty January series, that will entirely show you why the day was biased on the downside today. So this is the January 27 Jan 2026 30-minute OF, and you can see how the opening A period had some buyers, but the POC shifted to the top, and you can see the cot was red. And here this changed the entire picture. IS30 in the B, and you can see what the cot was showing you. And this is that 1 2 2 3 red, which was the rollover. We saw a similar green in the December series, and that was nothing but the cover of a seller, and that seller went freshly short in the January series. So this became the benchmark at the initial balance. And then what did we see? 26272. When 26206 broke and you're getting volume below that, you know that this IS30 is activated, and the target of this would be the range of this. So 26140, which we tagged to the dot, was the first target. And you can see how it remained on the downside. It gave another IS30 in the D period where we got the range extension. So this 26190 became your fresh reference to hold on to shorts. And then again, we got a third IS30. So this 26163 becomes your trailing stop loss. You will definitely book profit as per this target 26140. And now you will hold, and this 26164 will remain an important reference because this is coinciding with the VWAP of today. And today was more a trend day kind of a structure because we continued to probe lower. We got 3 IS30s in a single session, which is very rare. And 2 of them have already given the targets. In fact, all the 3 have given the targets. This was a very small range one, so it is already hit. 26110, I think, was the target of this last IS30. So all of them have given targets 1, and this is looking good to give the target 2 also. And what we are looking, the POC has shifted to the lows, but the cot is still red. Throughout the day, we saw red cot. Only in the closing, we saw some profit booking by the sellers. So this POC would be our reference for the January series. So it is so clear in the January series, but the sellers were aggressively coming in. So today was a very clear case of holding shorts, going shorts in the initial balance, especially after the B period, and then holding on to shorts with VWAP as your stop loss. And on these fresh IS30 signals, you could have taken a fresh short position if the booking is done, or trail as per this. So this was what happened today. So now coming to what we need to look forward for tomorrow's settlement. So let us go to the most two important weapons which we have. Before that, a quick look at the Volumix of both Nifty and Bank Nifty. I'll switch to the 3 minutes so that we have a clear view of the entire day. And you can see how when we started the day, the call Volumix was above and you even saw a swipe. But then this changed in the B period. We not only saw a crossover, we saw the 45 degrees coming into play. And since then, it held the 45 degrees. And we continued to, the Volumix, PE Volumix continued to rise. That was telling us that the supply is more than the demand. Same thing in Bank Nifty. We are looking at Bank Nifty because tomorrow is the settlement in Bank Nifty as well. So we can look at some good volumes coming in the options in Bank Nifty also. So it's for people who are trading Bank Nifty, same thing here. You see this crossover with a swipe. After this, there was no looking back. But then what happened? Bank Nifty made the low in the E, and after which it stalled. And you can see how right from that time, these Volumix charts started to contract and come towards each other. So it was very clear that the imbalance was done post the E period in Bank Nifty futures. So the Volumix is a very good tool to follow and know when the bias is in the favor of the sellers and when it is changing. So now coming to the next most important two window mode, which will be our most happening weapon for tomorrow's settlement. We have the gamma density chart on the left and the gamma exposure on the right. And we had discussed a similar chart last week on Monday, and we had seen how the gamma density and the gamma exposure both were pointing towards 26,200. And that is the reason we closed last week, I think, at 26,183. So it was a very it was a very active strike, and it was a short gamma, and it continued to remain short gamma all through the day, and we saw this volumes keeping on adding at that level. So but that happened on the settlement day. What are the levels which we need to watch out for tomorrow? So you can see how the gamma convexity and density are inside a 50-point range. 25950, which is today's POC in spot, is the gamma convexity point peak, and 26,000 is the density peak. So we have a 50-point difference in the gamma density. So we have to look at this 50-point range as the reference for the open. And what is the wider range on the downside? 25850 is the 1 sigma level to the downside, which will be the lower reference. It also coincides with the daily VPOC which we have in spot. So to recall, we went on to make lows of 2.693 in December. From there, we started to move higher, and then we left a VPOC at 25852, and then another important overlapping 2-week POC at 25882. So that 25882, 25850 will be the most important support zone in spot for tomorrow. And the writers are expecting that to hold. That is the reason we have this peaks at 25,950 and 26,000. The upper range is the 1 sigma is at 26,100, which is also coinciding with today's selling tail as well as Friday's selling tail. So you can tell that the seller is sitting at this reference, and any move above this can attract supply. So 26,100 is the reference on the upside, 25,850 is the lower support. So that is the immediate range which we are looking for tomorrow's settlement, 25,850 to 26,100, and immediate 50-point range is at 25,950 to 26,000. So coming to the gamma exposure, we have a single peak, but the single peak which is at 26,000 is long gamma. So when you have a long gamma, then you are not very sure about that strike being a pinned level. So we will have to wait and watch out if this long gamma can come lower and this 26,000 sees short gamma. And last week what happened, we saw a lot of volumes being attracted in the 26150 strike, because 26150 call and put, because that was one HVN which was forming in the spot. Similarly, today we have a POC at 25950. So tomorrow we can expect some volumes to start coming in the 25950 call and put, based on whether we are holding, we open in a range and we remain in the value of today's profile. So 25,950 would be a strike to watch along with this 26,000, and we will need to watch these two charts live tomorrow because they are updated with tick data. So any change in information, we will be able to view this and we will see how the inventory is changing hands. So the wider range, in case we get a sigma move, 2 sigma move, and we have the lower tail at 25,700 and the upper reference at 26,300. So this will be there is a 5% chance that we can get there, but the more probability of the range is between this 1 sigma on the downside 25850 to 26100. So this is about tomorrow's gamma positions, and it is long gamma for now, so we cannot say that 26,000 is pinned, but 25,950 and 26,000 would be the strikes which we will have to watch and see how the call and the puts are open interest is being built. And if there is anything any information changing in these two charts, then we will be able to trade that using the order flow of that particular strike. If the writers or any of the strike get hit, for example 26,000 now put is comfortably placed because 26,000 call is now comfortably placed because we are well below 26k, but 25,900 is short gamma, so the put writers at 25,900 may have to run for cover. And here there is a very small peak at 25,950 also, which could be on watch. So depending on how the volumes come in tomorrow at that in between strike of 25,950, we can look for a tradable setup or a dukan trade later in the day. So that is about the gamma story. And coming back to the Vtrender chart section, and we are very close to the end of 2025, and that is the reason we want all of them who are trading with us using the Vtrender charts and using these tools, which are the best you will ever find, and they guide you in the direction of what is happening latest in the market. The latest info is displayed on the screen, and we form a bias and we try to take setups when most of these tools are in sync. So we have a offer running for the New Year's. Firstly, before going to the chart section, a quick look at the Bank Nifty density and the gamma exposure also, because we are close to we are having the settlement tomorrow in this as well. So the gamma, you can see how it is pinned at 59,000 and 59,800, which is previous month's POC, and the gamma exposure is showing 59,000 as a single peak, but then again we have long gamma over here. So again, it is in a very narrow range, and the 1 sigma reference is 58,600 to 59,200. So this will be the range which we'll look for in Bank Nifty spot. The extreme would be 58,200 to the downside and 59,500 to the upside. So 59,500 call writers can be assured that they will be safe because that is the most extreme reference, and we have left a swing high over there. So you can find the gamma references, gamma levels in the link which is shared, and it will be updated in live market as the information changes. So coming to the New Year offer. So we want these tools to be effectively used. So our first offer on the charts, you can go to this link charts.vtrender.com/subscription. So we have a flat 30% offer on all annual plans and 20% on half yearly plans. So quarterly is of 5%. The coupon code is given in this link, HNY 2026. So you can go to this link and you can start your 2026 with a big advantage. So if you are serious about making money in derivatives market and in options, especially in Nifty, the weekly settlement, and we never know when the Bank Nifty weekly also could resume, going by the things which are being planned. But this is definitely on, and you have this offer running till the 5th of Jan. It is there for this week, so till the 4th of Jan. So make sure you take advantage of this and lock in the year 2026 with this awesome tools which we have, and make use of them to make money. Settlement, you have the gamma density and the gamma exposure to guide you. On other days you have the signals to tell you which you have to trade. So this is the offer we have for charts. HNY 2026 is the code. So guys who want to go with the charts, you can make use of this offer and make most of it. So the next offer would be for the VLD, Vtrender Live Desk, where we have a live community who are trading using all these tools day after day. And discussions happen in this room live, and we have whatever tools which we have discussed, the process, the setups, everything is uh, discussed live in this room, and we take the setup, we trade these setups. So the 5 p.m. sessions which we have is post market, so we can only tell what has happened. For example, we saw 3 IS30s in the January Nifty futures, but these were detected live in the VLD. So if you want to be part of the VLD, we have a similar offer running for the VLD, which is a great and awesome opportunity for people who want to not just use the chart, but also uh, know how to make use of them and how to convert the charts into good trading setups, the trades which has higher probability of uh, holding, of being a winner. So we have daily audio sessions. The advantage you have in the VLD, you have daily audio sessions after the initial balance is over. So 10:30 to 11 o'clock is our audio session, wherein we discuss what the open type was, what the initial balance was, and what are the probable setups for the rest of the day. And this happens every day in live markets. After the uh, audio session, we continue to monitor what the auction is doing, what the order flow is doing, what the gamma is showing us, and according to that we track the strikes in options and look for opportunities to take trades. So as I said, we have a similar offer, 30% off on all VLD plans, monthly, quarterly, annual. And this is not just for the old members, it is also valid for new members who want to join VLD. So the code is HNY 2026. Again, even for this, you need to go to vtrender.com/shop, select the VLD, and then go in for the tenure which you want to join in. And when you join the VLD, you will get access to the training library. And the training libraries has uh, got a set of 15 videos which will explain you the market profile setups and also the order flow rules which we go by. So it will be a complete package. And if you are going with the charts, you get access. If you're going for the annual plan, you will get access to the e-course, which will give you a brief learn yourself setup into the world of market profile and order flow. So do make use of this great opportunity. This is only going to be there for a few days. So HNY 2026 is the code, and you are getting a flat 30% off on all VLD plans. And if you join VLD, you automatically get access to all the tools which are there in the Vtrender charts. So you don't need to take a chart subscription separately, and you can just focus on learning and growing for the time you are joining the VLD. So in case any of you are subscribers of charts and want to join VLD, your current chart subscription will pause and be on hold as soon as you enroll for the VLD. Once your VLD subscription gets over, your earlier chart subscription gets renewed, gets restarted. So in any case, for guys who have any queries, the WhatsApp number is given. You can ping me on WhatsApp 90362 79747 for any queries on VLD. I'll be happy to answer them. You can also email at support@vtrender.com. And the link to the VLD is vtrender.com/live-desk. So you go to the website, you have them in the links. VLD is there right at the top. You can open up and you can go through what are the features which are available in the VLD. And as I mentioned, you automatically get access to all the tools which we have in the Vtrender charts. So make sure that you start and you are planning well for 2026. We plan to add more features in the blog as well as our webinars in the new year. And this is a step towards that. We want more and more people to be aware about these excellent tools which we can use on a daily basis to trade the market more effectively. So that is it for today from my side, guys. Thank you for joining in. And here's a great, very nice goodbye to the year 2025, and let's meet up back in for a 5 p.m. session in 2026. Thank you for joining in, and I'm signing off for now.